On the 1st of June, there would be a debit to Jane's business bank account and a credit to income received in advance. Remember, we cannot credit income since Jane has not yet provided the gardening service. We can only recognize income in the month in which the gardening service was actually done. Thus, the correct account would be income received in advance. The income received in advance T account in the general ledger would look like this. However, Jane would have provided the gardening service for Donovan in June. Thus, at the end of June, after the service was provided, we would debit income received in advance as the service has already been provided and Jane is no longer obligated to provide that service for June. By debiting a liability, we would be decreasing it. We would also credit income since we are now able to recognize revenue for June when the service was actually performed. Income received in advance T account in the general ledger would look like this. In July, the same journal entry would be processed to recognize revenue once the service for July has been done. The T account would look like this. And finally, in August, the revenue for the garden service provided would be recognized. This would effectively reduce income received in advance to zero. The T account would look like this. To recap, income received in advance is a liability, and as the service is provided or goods transferred to the buyer, the income is credited and income received in advance account is debited.